All right. First thing I'm going to do is review that we're like in an unprecedented time right now. The stock market's basically been going up every week for 14 weeks, and that hasn't happened since 1972, whenever there was the Nifty 50 and everyone was piling into the Nifty 50. So this is an unprecedented time. Usually, when you get overbought, you go down, you're oversold, you have this little cycle. But, we've had this 14-week period of time where we've been overbought. And basically, whenever you're overbought, that means people are buying and there's a lack of sellers. And that's very bullish. That is very good for the stock market. But it seems like we're kind of carried away right now. And like this guy's saying, it hasn't happened since 1972. And all it takes is for one bad thing to make the market sell off. And the one thing that was happening this week is very interesting. We had, hold on, let me get this. Okay, we had a New York Community Bank Corp. Had problems with these. It took over a company last year, Signature Bank, with all kind of commercial office loans that were going bad. And now they had the problems when they reported their earnings. They had to announce that they had to take a dividend cut. So everyone got scared that this was going to go out of business and getting taken over. But it looks like this is rallying right now, and there could be that one big problem could be not an issue after all. So that's pretty good for the stock market, because if this dropped, maybe there's some other bank stocks, and that could cause a market crash. But we'll see how this. I don't know anything about banks, so it's going to be hard to know, what this bank's going to do. But it's one less thing the stock market has to worry about if it doesn't go down. The other thing that happened this week, we had a company called ARM Holdings go up 50%. It was at $70 a share. Now it's like, 114. So this is a semiconductor stock, and this is fueling the AI mania right now. And all the AI-related companies are going up, and they're selling at a premium because of that. Because they're basically, this company, they make a lot of the components for cell phones and particularly AI-related things. So anyway, that goes back to our focus this year. We're going to have the things we focus on. Where's our notes? The things we focus on: interest rate cuts, the AI revolution will juice all stocks involved, weight loss drugs, and it affects a lot of industries. So right now, it looks like AI is going to be like for today, we look at the ETFs, semiconductor is up the most. And that's probably because all the semiconductor stocks, like the ARM Holdings, is juicing all the other ones. And NVIDIA is going to report their earnings in like 2 weeks. So if they report, look at NVIDIA right now, they're up another 3%. According to Yahoo Finance, their PEG ratio is 0.68, so they're 30% undervalued. So we've been following this for a while. Their numbers are like off the charts. If you see the profit margin, it's 4 times what we look for. Return on equity is 69. That's better than 13 we look for. They don't have any debt, and they're growing like 60% or so. So everything's going to focus on when their earnings come out, and that's going to be around a couple weeks from now. Okay, so looks like this New York Community Bank is hanging in there. It's not going down. And okay, so that was an interesting thing that happened. NVIDIA's been going up a lot recently, and it's getting bigger than Amazon. And it's if it has a good earnings report in a couple of weeks, it could go to be one of the biggest companies in the world. Okay, let's look at other things that are happening here. There's a big number. S&P hit 5,000 today. So people like these big numbers, and it doesn't really mean anything, actually. The other thing we have to think about is that the 2-year and the 10-year, they're actually going up today. This is a major, that's a lot, 0.03%. Let's look at the 10-year. 10-year. That went up a lot too, 0.11. Usually when that goes up, the stock market goes down. But you can see the correlation, the inverse correlation that we've had for such a long time, it's kind of, it doesn't work. Hasn't been working in the past week or two. But as the 10-year has been going up, the stock market's been going up too. So that's the first time that it's not correlating anymore. So this doesn't have to correlate forever. It just has done that for like a year or so. So but we're going to keep our eyes on that. If you look at our sectors going up and down today, the energy sector is going down. Energy. So let's look at. So if we look at the 10-year, we have a little 10-year treasury goes up. That's bad for companies that are in debt because it'll cost more for them to finance their debt. It's bad for small companies, small caps, because they usually need to borrow money. And it's bad for real estate because less people can afford mortgages. There's more to it than that, but that's our theme. But when we look at the ETFs, kind of plays out like that. Interest rates are going up today, and real estate is going down. That makes sense. That follows that pattern. Utilities, I don't know. That's the ones that are going up the most are the technology right now. Regional banks are getting relief rally from that New York Community Bank not going out of business. So a lot of times when you have a bank that has stress like that, all the banks around that in that sector go down with it. So now there's like a little bit of relief that it might not be going out of business. This New York Community Bank, the insiders are buying the stock because they were worried it could be a bank run. I'm saying if there's a bank run and this went out of business and there was a takeover, where maybe JP Morgan had to take it over, that could be like a major market event to make the stock market go down. So we don't know what's going to happen there. I don't know anything about this. But that's pretty big because that affects all the stocks if there's stress in the system. All right, so we can see that, you see, let's look at more things that are going on in Yahoo Finance. Okay, so we are hitting all-time highs here, and the Magnificent Seven are basically this year beating all other stocks too. Look at this. The information technology sector is up in communications. This is Google, Facebook, etc. They're up 8%, 5%. So they're leading the market again. They're actually more profitable. The top 7 or 10 stocks in the stock market, are more profitable than the rest of them combined. So there's a reason why they're still doing good. And that's why I still hold them. And I know that they're overvalued now, but they're still growing in an uncertain environment. Let's look at the worst. At the beginning of this year, we listed all the worst ones from last year, and to see if there was like a reversion. And it seems like the consumer staples, healthcare, and financials were bad last year, and they're turning around and being a good sector this year. And utilities are actually doing bad again this year. So most of my money is in the technology sector because those are the stocks in most of the mutual funds, and it's kind of reliable growth over time. So let me see. All right, that was a good review of that. Okay, let's look at our calendar. February is usually a bad month. It's turning out to be a pretty good month this year. We have a holiday coming up on the 19th, and people are usually happy around the holiday. So I'm thinking, right around the holiday, we're going to have like a positive time. That's why I was thinking we'd have a bad time now. But this is unprecedented. I'm having an overbought period of 14 weeks without a correction, really. So it's not normal, but that's what's happening right now. And we have like a momentum rally going on. Okay, so you can see almost every sector we're following, it's overbought. It's been overbought for 14 weeks, and it keeps going up. But we're still at the top of this trading range for almost everything we're following. Okay, the defense sector, almost every one of these ETFs is overbought. But that doesn't mean it can't keep going up. All right, so let's look at some more things here to think about. The S&P has been up 1.5%. We're unchanged with the U.S. Treasuries. So with the 10-year, this is the most important one. So unchanged. I guess if it's going up this week, we'd expect the stock market to go down. But so far it's unchanged, so it's been going up. Notable earnings from this week. Eli Lilly had an awesome earnings report, and Chipotle had a good earnings report too. We covered both of those last week in a couple weeks. So I added Chipotle as a stock we're following because it's a stock that Bill Ackman has in his top 5, and they had a good earnings report this week. So we have less and less momentum every week, but we're still most of the stocks in the stock market are above their 50-day moving average and 200-day moving average. So that is momentum. So it's really hard to buy stocks right now because we've been overbought for 14 weeks. But that's where we're at right now. All right. So what are the talking points we have here? Okay, February, one of the worst months of the year, but we're still doing good this year. Okay, look at the S&P. We have stochastics of 93, so we're still overbought, but we haven't broken out of this range yet. That's interesting. The 10-year and the 2-year both are they're basically they've been going up in the last week. The 10-year is unchanged, but the stock market is going up, which it's its first little uncorrelation. So I'm going to follow that. I don't know why, but we might not be able to have this correlation anymore, but we'll follow it though. Okay, oil is up just a little bit. That doesn't tell us anything. And the dollar is up 1%. That's bad for stocks, but it's still not that much. Inflation hasn't changed at all. Okay, so that's good to know. We've been in extreme greed we've been greed or extreme greed for 14 weeks. That's really unusual. So when you have extreme greed, whatever you do, don't get over your skis and assume it's going to last forever, because eventually we're going to correct. Individual investors are still greedy. So you see, okay, U.S. dollars is still unchanged, so that doesn't affect anything. The VIX is down to 12. This is like the lowest it's been ever. I mean, in the last 10 years. So people are absolutely not fearful at all. The one thing that could have caused fear to go into the market is a bank failure, and that doesn't seem to be happening. We're at the super top of our emotional gauge. So the investor emotion is new paradigm AI buy, and we're not even close to capitulation or despair right now. The Chinese seem to have a real estate crisis, and one thing that could be happening, China might have to start selling U.S. real estate due to that crisis, and that could cause a financial crisis in America. So we're keeping track of all the things that could cause a crisis in America, and you have to figure out how this affects the stocks that you own. But right now we're kind of isolated, and none of this affects the big stocks we're following. New York Community Bank shares down a lot. It's starting to go back up today, but commercial real estate defaults is one of the biggest problems. It could crash the market. I don't know when how that's going to affect the market, but that's the one thing that everyone's saying could cause a problem. Okay, so let me see. We already talked about this. The sectors they're doing good this year so far. Okay, so let's look at more of the market movers here. Okay, so let's look at you already looked at the sectors. Let's look at the individual stocks. I think S&P. Okay, M-phase. Usually M-phase, a lot of the solar companies do bad whenever interest rates go up because people can't afford installs because they have to borrow money to do these rooftop installs. So I'm surprised they're up a lot. Let me see. Okay, you see half of these stocks in here are semiconductor companies. Whenever you had this ARM Holdings go up 50%, that juiced the whole semiconductor sector, and every one of those is going up for a couple of days now. So let's look at the other things that are happening. Okay, so Fortinet, they're a cyber security play. So they just had earnings come up. And what other stocks are in there? No, nothing else. Palo Alto Networks, they're cybersecurity. So the things here are cybersecurity. You have Lam Research. Half of these are semiconductor companies. The ones doing the worst. Expedia, they had earnings come out. That wasn't that great. They also could be affected by AI. Maybe talk to your chat GPT and it'll make a vacation for you. And we talked about that a couple of weeks ago, but there could be some of that affecting the stock. All these stocks are companies that are affected by rising interest rates. A lot of these had to borrow money during the pandemic to survive. They didn't have like Royal Caribbean, Norwegian Cruise. So whenever you have rise of interest rates, so its 10-year is rising a lot. So whenever that happens, every one of the companies that need to borrow money goes down. You see, Carnival is one, Royal Caribbean, Norwegian. Okay. What else can we see here? Okay, that's all we can get from that. Let's look at the NASDAQ top. Okay, these of course, Zscaler is another cybersecurity. So we have Fortinet, Zscaler, Palo Alto. They're all doing good. So I didn't start looking at these yet, but there is a theme that a lot of people are following: cybersecurity, because people have to pay for that, and they can raise their rates, and there's a steady demand. And companies, the more hacks that are in the front page, the more people have to pay for that. So maybe we can start looking at that next time, because that seems like they're growing a lot. They're very expensive, but they're growing a lot. Let's look at some of the top decliners. Booking Holdings. It's going down because Expedia went down. And okay, that's all we can get from that. And can we get anything from this? Okay, we had Walt Disney came out with earnings, and it was better than expected. It went up like 12%. And they're also getting rid of the problem with their ESPN. So that was really good news for Disney, but they ran up 12%. Now they're giving it back. And what else do we have here? Nothing else there. Okay, let's look at some of the talking points we have. Okay, we're reviewing Dan Niles' picks for the beginning of the year. His top two picks are doing really good. Amazon is up almost 12% this year. Meta up 32% this year. So next time he has some picks, we're going to really pay attention. Texas Instrument, we were reviewing this before. We thought it wasn't that great of a thing. They didn't have really great numbers. So far that didn't pan out yet, but we're going to keep track of it. XBI, that's the small cap ETF. No, that's not. It's the biotech ETF. It hasn't done anything this year. And the K-Web is down 11%. So seems like China has a huge problem with their economy and real estate, and we don't understand that. It's really hard to invest in that, but we'll keep track of the top picks. Okay, so there are articles every day about the China property crisis starting to ripple across the world. I mentioned this earlier. There's companies that are real estate companies in China that are doing bad, and they have to liquidate, and China's trying to prop up their stock market, and it's getting it's pretty dangerous. So that might cause a crisis in America. So we're going to keep track of this. China has a lot of investments in America, and if they have to liquidate, just because of their situation, it might affect the stock market in America. We'll keep track of that. We also like to keep track of when a recession might happen. And there's been a lot of big tech layoffs recently. And some of our hints for a recession are layoffs, unemployment, and the price of oil. We get a lot of hints that the recession's coming. And we also have Jeffrey Gundlach saying, he's really smart, he's saying there's going to be a recession. There's a million indicators he found. So the reason why that's so important is if you look at our timeline, if you can predict when a recession is going to hit, usually the stock market goes down like 10 or 20% if there's a recession. So you got to be ready in your portfolio to handle that. Right now, the economy is pretty strong, so it's not going to happen soon, but we have to keep track of those things. Let's get back to our talking points here. Okay, 2 weeks ago or a week ago, we were following Chipotle because Bill Ackman was a top 5 stock from Bill Ackman, and they crushed their estimates, and it seems like they're growing their restaurant traffic 7.4%. So I thought it'd be a good time because we were thinking about adding that to our watch list before, but now it seems like it's pretty reliable and they're doing really good. The catalyst for this company, they buy the rice for $1 and sell it for $10. And they're opening new stores, and the president is basically saying, the CEO is saying that they're going to open like a lot of new stores in America and Canada in the near future. So they're beating their expectations and they're doing really good. What I thought would be interesting is to go through some of their numbers. This is I get this from Merrill Edge. It's also available, I think, on Schwab. It's the CFRA report. It's one of the more reliable ones. They say that in their report, the fair value is right where it's at right now. It's like overvalued by 2% maybe. So it's pretty fairly valued. What I like to look for in a stock is the cash flow, earnings, and I hope they're going up over the years. And they're actually going up, which is really good. And the revenue going up over the years like this. So this is like a perfect growth stock numbers, and they've always commanded a high premium. The PE ratio has always been pretty high. Right now, it's really let me see. Let's look at it's growing like 18% when I looked at the numbers, and it's like 3 times overvalued. That's why I haven't really considered buying it. I would buy it when it's PEG ratio 1, but it never goes down to 1. That's the problem. So I looked at all the earnings estimates for the next couple of years, and it's consistently 18%. It's very hard to find stock that consistently grows at 18%. So for a stock like this that has a really rich premium, what I do is I wait for a sell-off and wait for it to go down like in half or something, and then start buying a little bit at a time. But right now, it seems like it's going to keep that premium of like 3 times the growth rate, P at 59, because it's still growing consistently. So I added that to our chart, let's look at our investments. Okay, so Chipotle, I added that. I took out this week. I took out a couple of the losers that we've been following, like CVS, and I added this one for the growth rate. I said 18%, and I put the yield in there. So if you put 3 shares of Chipotle and you see how much it's going to be worth over time, you can see if it grows at 18%, it'll be 9,000, 11,000, 13, 16 over time. Okay, cancel. So I added that to our chart so we can watch that, but I'm waiting for it to go down with the stock market, like correction, before I look at that. I usually like to buy my stocks at a PEG ratio 1 to 1.5 or something like that. But look at this chart. It's like one of the perfect form. This goes back like a long time, like a couple of years. This perfectly formed channel. It's at the top of the channel now. I would rather wait for it to go down to here to buy it. Like this would be a good time to buy it because it's oversold. And at the bottom of its channel, right here, it's a good time. It's oversold, and the stochastics are like 0. So we'll wait for it to go down there again. Then we can look at it. Okay, so let's go back to our meeting notes here. Okay, so we've been following Eli Lilly for a long time, and one of their biggest competitors in the weight loss drug market is Novo Nordisk. And I thought it'd be interesting because it'd be interesting to look at the numbers for Novo Nordisk. They're a foreign company. So they're listed in America as an ADR, but so this company had a price raise from 135 from 115. So I said, well, let's look at that. One of their biggest problems, a lot of times when you jump into a stock, you got to figure out no company is perfect. They all have warts. They have problems, issues they got to figure out. And this one the problems that this stock has is they had a huge demand for their Wegovy weight loss drug, and they can't make enough. So recently they bought a company that's Catalent that actually increases their production, so capacity. So and Eli Lilly has the same problem where they can't make enough of their weight loss drug. So so I said, let's look at their numbers, see what numbers they have. They're actually growing around 20%. If you look at this year, last year, and this year, then it tails off to 5 or 9%. We don't know anything, so we'll stay at what it's currently growing at. So they're growing around 20%, and their PE is 36. So the PEG ratio is around 1.8. So that's right around the time where I get interested, when it's a PEG ratio 1.5 or so. And you look at all the numbers, that it's going up a lot. So let's look at their statistics. And according to Yahoo Finance, their forward PE is 36, and their PEG ratio is 4. So they're 4 times overvalued, according to Yahoo Finance. Yahoo Finance thinks that they're only growing at like 10 PE. So let's look at this. They think that 9% is more of a sustainable long-term growth rate. So, but their profit margin is really good. Their return on equity is really good. And you got to keep in mind, they have more cash than debt, so that's good. But you got to keep in mind, this is foreign companies. They have a different way of, they have different security rules they got to follow over there. So a lot of times in China, and I'm not sure where this company is located, but you have to take these numbers with a grain of salt just in case there's a translation problem. Okay, so it looks pretty good, and it has I think a PEG ratio of 1.8. So I'm going to wait for it to go down a little bit before I get interested. I like 1.5 PEG ratio. Okay, while we're looking at that, I thought it'd be interesting to see some of the headlines about Eli Lilly. We've been following this for like a year now. Here's some headlines. There was very good earnings report this week. And then it went down, and Kramer says that's nuts. This stupidity for people selling when they have good results. So, you see, the other things that came out, the weight loss drug they're selling also shows promise to treat fatty liver disease. So this could be like a wonder drug that actually can be repurposed and sold for different diseases. And they're actually trying to get the FDA to approve it for different reasons. And there's a lot more than this fatty liver. There's like cardiovascular, because if you reduce your weight, that helps your heart and a lot of other things. So, the biggest problem right now, they're trying to expand their capacity, and they told the market this week they can't make enough of this drug for the demand, and that's a really good thing, I think. But you can see Eli Lilly it's like a growth stock chart. If you look at that, I mean, it's like a perfect growth stock going up in this channel, and right now it's overbought and it's going down. So it's better to buy it when it's right here, when it's oversold. No, right here, it's oversold, and the stochastics are low. Maybe right here when it's oversold near the bottom of the channel, and stochastics are low. So it's not a good time to buy that yet. If I look at the statistics of Eli Lilly, this is a lot better than Nordisk. They're growing around 40% right now, but their PE is 126. That is outrageous. So it's 3 times overvalued. But they can't meet the demand. So that means if they make more, find a way to make more, they're actually investing in that, then they can sell a lot more. And if they get this drug approved for different diseases, that is like, that magnifies the amount that they can make. And the Alzheimer's drug, if they get that approved, that could make this drug, this stock go up a lot. All right, so that's Eli Lilly. I like to look at what Morningstar and CFRA says about it. Morningstar says they have a wide moat, and they think it's likely too optimistic on the firm's weight loss drugs, so they don't think it's going to be selling that much. They don't think the weight loss drugs are going to be sustainable to their predictions. They say that the price to fair value is 1.4, so that's like 40% overvalued. They say it's only worth $500, so that's not that great. They only gave it 2 stars. Let's look at what CFRA says. I think this is more reliable. They also said it's not worth that much. It's overvalued by 43%, and it's only worth like $400. So I looked at this. Look, I expected it to straight line up, but it wasn't. It's actually pretty inconsistent. I guess with drug companies, you have hits and misses, and you have the pandemic in there a little bit. So the PE ratio it's sold at a premium for a long time, but it's higher PE now than it was in the past. So that's not good, because a lot of times stocks revert to their growth rate of the past. So that's around 22. So that's half of what it's at now. So so it's overvalued. It's basically expanded its multiple. That means the PE goes up, but the earnings don't go up. So let's see what happens there. Return on equity, that has gone up over time, and that's good. You see it goes up in a straight line. Okay, here's the other thing CFRA says about it. They said this donanemab for Alzheimer's disease, that could get approval as early as this year. And they have a lot of other promising drugs in the pipeline. So basically, if they don't have these drugs, if they don't come up, if they don't pan out, then the stock will probably go down. That's the big problem with this stock right now. All right. I thought it'd be interesting to run through hold on. I thought it'd be interesting to run through a screen and to see some of the undervalued stocks. So I sorted by PEG ratio. That should have all the undervalued stocks there. I went through a couple of these, and there were like, I couldn't find one I really liked, but I saw one called Aptiv, APTV. They used to be called Delphi Automotive, and so they changed their name. They do well. This is an example of just you find a stock. It looks like it's growing at 23%. Return on equity is 28. All these things match what we're looking for, but you got to figure out the stock and dive into it and see if it's even has any value. If their story makes sense. So what I did was the first thing I went to Yahoo Finance. There's a summary section. Explains what it does. They basically make the harnesses for cars, like the internal wiring assemblies, and so they have a big footprint in the EV world. So a lot of the stocks, this whole industry has been going down. If we look at the stocks we're following in this industry, you can see, let's look at Ford. It's in a downtrend. And you have Tesla is going down. Tesla, it's kind of in a downtrend. And if you look at every one of the stocks like GM, they've been in a downtrend, but they won't be in a downtrend forever. A lot of times stocks trade with each other. So this is an example of like the home builders. As soon as they started raising interest rates last year, the home builders went down together. And so I thought, well, it'd be interesting to research this stock just because it's a random stock. It's a small one. It's only 22 billion market cap. So according to Yahoo Finance, that's a good first thing I go to. In the statistics section, it says there's 30% undervalued. So that was a good confirmation. At least we had something that was worth looking at. The profit margin was good. That's 14. And the return on equity was good. That's 28. And they had 5 billion in debt. Okay, that's not so good, but 5 billion out of 22 billion. That's reasonable, but that's something to remember whenever you're investing in it. Okay, so I looked at their annual earnings estimates. They're supposed to be growing around 20%, and their PE ratio is only 7.5. So they're like 3 times undervalued according to this. So if you think of the catalysts for this stock, if there is a big EV transition, there's a lot of company. This company services a lot of different brands. So they'll do Ford and GM, all the big brands actually. So if the industry turns around, then this stock will benefit too. So if we look at the Tesla, and let's look at Ford. Okay, let's look at Tesla just for fun. If we see Tesla, if we see these car stocks started to break out of their downward channel and started an uptrend, maybe that's the time we start looking at some of these secondary plays, like the Aptiv, because then it will break out of its place too, because they always go together. Right now, they're all in a downtrend, so it's like catching a falling knife with these. I don't know if I would invest in a sector that's in a downtrend, and even though it has good numbers. But we'll just keep our eyes on this one because it looks like a good stock. And it looks like regardless of what's happening with all the other stocks in the sector, it has a very consistent growth rate. And that's pretty good. So I guess we'll have to do more research to see if it makes sense. If the basically you look at the current news on the stock, why they're selling off. Let's look at what the chart says. The chart says, well, it's in a downtrend, just like the other. How about this? Let's do this. I didn't think about this until now. Let's look at Aptiv and compare it against Ford and GM. Let's say compare. Let's look at the chart, advanced chart. Okay, so it looks like they could be starting an uptrend. I don't know. If it breaks out of there, then it might be a time to start looking at it. But right now, it's still in this downtrend with all the other. Let's do the comparison against Ford. Ford's going to be saved, and then we'll add GM. Okay, they trade basically in line with each other. But you can see Ford and GM are kind of breaking out. And this Aptiv hasn't really followed that yet. So Aptiv, okay, so that's you can see how it's like a 1-to-1 correlation. So maybe it's time for this Aptiv to follow the other ones, because the Ford actually had a good earnings report recently. So maybe that's, we'll keep following this Aptiv to see what happens there. All right, let's see what all the Morningstar says about it and CFRA. Both of them have a buy, 5 stars on both CFRA and Morningstar. That doesn't happen very often. CFRA wasn't, because it's such a small stock, they don't give a fair value, and they didn't want to bother with it. We didn't see anything consistent in the earnings and the revenue. I guess the revenue has been going up over time in general, but it's not very consistent. You can see right now the return on equity is better than it has been in the past. So it was 7. There's something happened in the past 2-3 years where it's getting better. It's being more efficient. So this seems to pass all the things I'm looking for except for this fair value. Let's look at Morningstar, what it says. They say it's half price. Its fair value is double of what it's trading at right now. They said the UAW labor stoppage affected their output, their sales. So, but that was a one-time thing. I guess that's what happened next time there's a strike. But you see, what else did they say? Because of softening electric vehicle demand, higher than expected record. Okay, so the big problem with this stock is they're at the mercy of the demand of electric vehicles in America, and it seems like recently there's been news stories that like EVs there's like all kind of problems where Hertz had to reduce their inventory of rental cars because they were hard to maintain and they cost a lot to repair, etc. So that's one of the big problems. If there is a continuation of people going to gas instead of electric, that might hurt this stock. And according to, they say they're trading at 45% discount to fair value. But they also sell to regular gas cars too, and they also sell parts to regular gas cars. So it's not just EVs that they make harnesses for. All right, so okay. Here's what CFRA. I like reading this little section of the CFRA report. They say their strong buy opinion reflects that favorable risk reward at current levels. It was underperforming the last 2 years. It's one of the strongest growth stories in the auto parts equipment space. And they dramatically overpaid for a takeover. And I guess that's where we saw in the debt section of the, when we looked at this, where was it? Right here. Right here. We looked at the total debt. They did a takeover and they paid a lot for that. So it's going to take a while for them to get rid of that debt. And that was one of the biggest problems. As soon as they get rid of this debt, that'll make it a lot better, more attractive to investors. Let me see. The yearly revenue growth to exceed the average growth in light vehicle demand. Okay, so they think it's a strong buy, and they think the target is higher than it's at right now. And that's based on the PE ratio, the overtime. All right, so that was a good exercise. Let me see. Let's look at some of the stochastics charts for some of the things we're following. Okay. Everything is pretty much overvalued. Let's look at the stock market right now. Just to see. We got that. Okay. Here we saw that. Okay, so everything's pretty much overbought. And it's been overbought for 14 weeks. So it's who knows what's going to happen next, but I'm fully invested. I've always been fully invested, and even though it's overvalued, I'm going to keep everything because it's basically still growing. And let me see. Okay, I don't see anything notable. Everything we're looking right here and right here. This is everything is pretty much at the top of its range and not a good time to buy. This tried to break out of its downtrend, but it's still basically still in a downtrend. The XLU, XLRE, see EWC. Okay, this year it seems like a lot of the healthcare stocks are like breaking out. AbbVie has gone up like 15% this year. You can see a lot of the drug stocks. Abbott, you can see it's gone up a lot, and they're still, both of them are still kind of in this range, and they're almost ready to break out of that. We're going to follow that, because if they do, all this drug stocks go up with them, and that's. We look at our meeting notes. Where is it? There it is. You can see the healthcare related stocks are up 6% this year. So that could be a worst to first. They could be the ones doing good this year. Alibaba is still going down. Very unreliable, not a good stock to be looking at. Google is still in its uptrend. They were oversold last week, and now they're starting to go up. And Philip Morris is in a downtrend. And Amazon is breaking out of its channel, and it's going into its new uptrend. Apple is staying within its channel here, and it's halfway between overbought and oversold. Okay, AT&T is going up. It's been in an uptrend for since August. And this is an example of a stock that we're stopping. We're not following anymore because its earnings aren't that great anymore. And let me see. Even when the other drug stocks are going up, this one is going down. That's just an indication that their earnings aren't that great. And let's see. Look at Meta, how it's continued to be overbought for at least 2 months, and it's still going up today a little bit. Pepsi had bad earnings today, so there's a very good chance it's going to continue its downtrend, going down like this. It tried to break out right there, but today went down because of earnings. Procter & Gamble is stuck in this trading range right here. Best time to buy that would have been right here, when it's oversold, and it's near the bottom of its chart, like right here and right there. So it doesn't look like there's any buy points for any of the stocks we're following. They're all pretty much overbought. CMG. Yeah, so this is the one we just added to our watch list, CMG. They're overbought, and they're basically kind of at the top of their range. We'll wait for it to go down to here, wait to here, or maybe to here whenever it's oversold. You see. We have every one of these is still overbought. Well, look at this one. T-Mobile. It's at the bottom of its channel, and it's oversold. That's a good time to buy that one. All right. So I think, does anyone have any questions? Any comments on what's going on right now?
I think we're due for correction, as you mentioned. I think you already mentioned that. Yeah, I'm ready for that correction to come.
Oh yeah.
Before it keeps rallying, because if it keeps rallying, then the correction is going to be really hard.
This is like it's pretty unprecedented. It just stays overbought like that. It doesn't happen all the time.
Yeah.
What do you think of Tesla? You're a Tesla follower.
Tesla right now, it's in that downtrend, as you already mentioned it. It's in that downtrend mode right now. So I won't touch Tesla at this point. Yeah. But yes, I'm holding it, but I won't. If somebody's planning to buy it or anything, I won't touch it at this point. I'll wait until it settles down and until So but Tesla has there's a long way to it has a long way to go. So
I was waiting for Tesla to go down and bought some. It's like a couple weeks ago.
I did
buy
some options.
Yeah, Tesla. It went up since then.
Yeah, same thing with my nephew and I. We both bought some options. But for the negative, if it goes to like $130, I'll buy it. So if you buy it, you get a good price. If you buy it for if you look for $130 Tesla stock price for December 2024, they pay you $10. So why not? $1,000. So take that.
But I look at Tesla as a short-term instead of long-term investment.
Yeah. Tesla is not you can keep it long-term, but in long-term, I see that if you don't play as the market moves with Tesla, you may not gain anything, frankly speaking. So you have to be smart enough to go when you want to buy your calls or when you want to sell your puts. You have to be smart enough to do that. And at this point, I know this is going to go up, so that's why as soon as it dropped below 180, I immediately bought some options for Tesla.
Here's a chart going back since the beginning of time. I like to look at the support. You have whenever it bounces down like this and it hits there, that's like support. And you can see that every time we hit that range, the times that we hit that, we have a bounce usually, and that's where we're bouncing right now. And if it doesn't hold there, we have a spot right here where it would hold 160. And if it goes down to 108, like it did during 2003, January 2003, it would hold there. That's past support. And it's the same thing with resistance. If it goes up to here again, 404, then there's a chance it won't go higher than that. That's a ceiling. There's a ceiling here. There's a ceiling here. This is a very strong ceiling because you can see we had a ceiling there, a ceiling there, a ceiling there, right? So that, if it gets up to here, then you would normally sell it because then you have that past ceiling. And Apple has that same. Oh, I'm sorry.
Same thing, yeah. I think same thing. Tesla and Apple. I was reading some articles. Somebody was mentioning that Tesla and Apple are the only stocks which you can buy at this point. But the rest all stocks are they are overbought. It's like they're too expensive. It's just that's not the actual price of those stocks.
So you can see Apple here, it has this 196. It went right here, went there 3 times. That's like a ceiling. If it goes back up there, it will probably, unless there's like good earnings or some reason for it to go out of there. And if Apple went down 168, we have support at 168.
When is Apple's earning? Did they already?
Oh yeah, they had the earnings like 2 weeks ago or so.
Yeah, I think so. Yeah, I think I saw
And
that. Yeah.
it was decent. It wasn't great.
Yeah.
They still have 2% growth. They said in their iPhone growth, and that wasn't that great. But it was like negative before. So Apple wasn't growing a whole lot. That's not good. But for me, what I'm thinking of Apple, they have over 2 billion devices. If they have the killer service that everyone needs and they can advertise with it, just think about 2 billion users generating advertising revenue or whatever it is. They don't have that app yet, but if they do, that's a great platform to distribute. It's the same thing with Facebook. Facebook has 2 billion active users, and I think there's power in that, when you have a platform and you generate income from your daily active users. But they're totally overvalued, all the big tech stocks right now. But
isn't also Apple suffer a setback with China banning state employee from using Apple product?
Yeah, that's like a small portion of China. Yeah,
but that also mean the regular Chinese president also not going to buy them either.
They've had problems. Here's what Tim Cook said on the call this past 2 weeks ago. He said Apple still has 4 out of the 5 best-selling smartphones in China. So they have a good market share, but they're not selling as many as they want there. So that's why the stock went down or didn't do anything after this earnings report, because they're not growing in China. And this whole thing with the potential issues with the China, there's a crisis in China where their stock market's going down, their real estate sector is going down, right? So they have all these problems. Here it is. So China real estate crisis, their stock market's going down. Then America, a lot of American companies are growing in China, like Starbucks and Apple. If the China doesn't buy their iPhones and the China starts selling off their real estate in America, that could be a big problem for Apple and the other companies that are expanding in China. So that's why I keep an eye on this kind of thing, because that actually affects, what people pay for Apple in a way. Because right now, China was their biggest problem in their earnings report this time. So, anyways, I think I've overextended my time frame. So, thank you all for attending. I hope that helped, and I hope you have a really good weekend.
Thanks, Greg. Thank you.
All right, awesome. All right, talk to you later.